I hadn't seen Hugh for a while. And so, after this presentation, I had like a scrum of people around me, and suddenly this man with his shirt unbuttoned down to his waist and wild hair started coming up and going, "Oh, are you buying receivers on like this and that?" And I was like, "No, I'm a very simple guy. I just buy bonds if I like them." And then later on, I was like, "Hang on a second, that's Hugh Henry." What's
Hugh Hendry 2.0. Welcome to the Acid Capitalist podcast. It is episode 48, and I am back, people. It is the return of the Mac. The Alchemist has returned. Chris Sweeney here at the controls. I let them go for a week, and we were into UFOs and all sorts of stuff, so I've come back to get this show back on the road, people. And of course, I am joined by my partner in crime. He recommends you panic, the Acid Capitalist himself, Mr. Hugh Hendry. How are you, Hugh?
I'm all the better, Chris, for having a bit of alchemy back on the show. And for those perhaps joining us for the first time, I am Hugh Hendry. You can find me on Twitter, Hendry_Hugh, or at Hendry_Hugh. You can find me on Hugh Hendry Official, YouTube and Instagram for those who like to chase bikinis. And I was, just like our special guest, who do the same, but I was a macro hedge fund manager. I operated an eclectic hedge fund for 15 years between the end of 2002 and the end of 2017. And the idea of the show is to kind of try and demonstrate the kind of thought process and the nature of narrative, the importance and the nature of narrative in how we try and conceive and unlock the macro riddles. So I think, without no further ado, Chris, let's pass over and let's reveal the hidden guest.
Exactly. We have a big guest, people. He is Hugh Henry's equal in the sense that he has also done 15 years at the coalface at hedge funds, and he is Russell Clark. How are you, Russell? And thank you for coming on the show.
Oh, thank you for having me. It's wonderful to be here. Wonderful to see both of you.
Brilliant. Well, Russell, maybe you could give us a wee bit of a flavour about your background just before we start, because people know about me and Hugh in probably a painstaking detail, but we've you're a new face for some of our viewers, so maybe you could fill us in about your career sort of briefly and where you are at the moment in your journey.
Yeah, absolutely.
First thing, but give us your Twitter handle. I think you're on Substack. So start from the present, where people can find you, etc.
Okay, well, on Twitter, I'm Rampaging Russ is my handle, which is an old handle from way back. I won't go into where that name came from.
No, exactly. We will go into where that name comes from. We'll keep that. We'll keep it on ice, but we're all very intrigued by it.
But my Substack is very boringly, it's www.russell-clark.com. And that is, to be honest, where I do most of my stuff now. I do like videos and just talk about general things and trying to get my head around, I think, what is a very strange and unusual world in the world of finance these days, which doesn't really match up with what a lot of people think. So a lot of my thoughts of why it looks like that are there. So that's where most people can find me. So I'll give you a bit more of a full background, right?
Sure.
So I'm from Australia. At that time in Australia, everyone studied Japanese because that was the way to make money. And then when I hit 16, 17, my parents sent me for a one-year high school exchange to Japan in 91. So literally the very top of the bubble economy. But you weren't sure Japan was going to end for a while. But I kept doing a degree in it, learned Japanese. And then by about 94, 96, because I'd been going back, I went back to university. My Japanese is really, really good. But I suddenly realized about 94, 95, oh no, Japan's done. I've just wasted 10 years of my life. What am I going to do about this? And then you can either just throw away everything, or you can try and take what you've got and try and extend it to find out what you could do with it. And for me, that was, at that time, so looking around and going, you know what, with Japanese, and I'm able to read and write Japanese, I can actually extend and start learning Chinese relatively easily. So in '98, I went to Hong Kong. I started learning Chinese. And then by going around in southern China a lot, because I was working for a manufacturing company, I went, oh man, China is the next big thing. 100% guaranteed. You could just see it. Costs were low. Infrastructure was there. Everyone hated it. And so I then spent my rest of my career doing China and then everything that was China related. And that's how I got my first big break. I was an emerging market specialist before emerging markets got hot. And that's how you really go up that way. And intriguingly, in a sort of real sort of irony, is that the disaster that turned into Japan in the 90s and 2000s, I could see after the GFC that the rest of the world was going to go the same way. I basically for 5 to 6 years from 2010 onwards, just put on Japan-style trades constantly and made extremely good money from just playing the world moving Japanesey.
You said kind of 94, 95, you got it. Japan was over. And like 96 or something, you could see the rise of China. And I'm guessing you could see that kind of mercantilism model and how there was a baton being passed on. But can you just again for the wider audience, why you knew Japan was over? Because I do not wish to suggest that Bitcoin is over, right? But things we can have bull markets followed by bear markets, and just if we can kind of share our knowledge about kind of again being able to identify when the bull market becomes a bear and vice versa.
Yeah, I mean the thing about Japan, I think when you knew it was over was that Japan had gotten so expensive back in the early 90s. So when I went from Australia to Japan, and this I think has been a valuable life lesson for me. So in Australia, I did double maths and physics and chemistry at school, and I wasn't the best sportsman, so I was 100% geek. And then it's true. And average height in Australia is 6 foot or at school. So everything about me is average, and I was more on the geeky side. I won't tell you the names they used to call me at school because I went to a state school and that sort of stuff.
Rampaging Russ, no?
No, Rampaging Russ is me trying to discard that old lifestyle. As I said, I'm not going to mention them. But anyway, I moved to Japan at high school. Suddenly I'm like...
Japan was expensive.
What's that?
Japan was expensive.
Oh, super expensive. I mean, I felt so poor. I like to think of things in terms of beer. So, in Australia at that time, you could buy a beer for $1, and beers in Japan at that time cost like $5. It was like a 5-to-1 ratio. You suddenly felt very poor.
Where is that ratio now, Russell? Do you know?
It's probably, what beer in Japan hasn't changed price, it's still 500 yen. So I'd say Australia is now twice the price as Japan.
Wow. So we've gone from Japan being 5-to-1 to Japan being 50% of Australia.
Yeah.
Cool.
I'll tell you what's even more amazing is I went back a few years ago. I went back to Osaka, which is where I was working as like an English teacher for a while, a bartender, and caught up with some English teachers there. And I said, what's the hourly wage you're getting for teaching English? And it was still 2,000 yen an hour, which is exactly what I was getting back in 94.
What? 94? You were getting the same money as they're getting now?
Correct.
Yeah, whoa.
What does that say about quantitative easing? Because our Japanese friends have been doing it longer than everyone else. In fact, they're in the 27th iteration. Where's the inflation, Russell?
That's the thing is, I think this is where my sort of Substack is going, is that when you are Japan doesn't have any control over its policy because there's no real independence. It's reliant on the US military alliance. It doesn't have its own sort of offensive capabilities. It's reliant on the US market. And so the only way it can generate growth is through devaluing and trying to be competitive with other export-focused nations. So Japan spent the last 34 years competing with first Korea and Thailand and Malaysia, and now it's been spending the last 10, 15 years competing with China. So basically, they've just sort of kept their wages super, super low. And in a way, if you were doing the US equivalent, it's like low-end Americans haven't seen a pay increase because they've been trying to compete with Mexicans, right? But there's far less Mexicans than there are Chinese relative to the Japanese population. That makes sense.
Yeah. We see, for me, let's touch upon that, because a weaker yen, I want to say, does not strike at the root cause or does not offer redemption to Japan, because the principal problem with Japan is the fact that those wages are still stuck at 1994 levels. And when, you know this, Russell, when you have a change in the relative price, the relative external price, i.e. when the currency weakens, that is a transfer of income away from the consumer sector to the corporate sector. And so, and what that is doing is it is extinguishing endogenous Japanese growth, and it's making it again and again dependent on overseas markets to create exports. And they're just stuck in this mercantilist redux. And so, like, the shock to everyone is Japan needs a stronger currency. The renminbi needs to be stronger. We have to enrich these very, very productive folk over there so that they can actually suddenly feel confident, be rewarded, and actually create growth within their own domestic borders. Am I talking nonsense there? Or?
No, Hugh, you're 100% correct. And I think it's exactly what the Chinese are doing. The Chinese, I think, have looked at Japan and said, this is a disaster. We're not going to devalue. We're going to put capital controls on if we have to. And we're going to promote domestic growth at the expense of corporate profits if we need to, which is why that stock market's been a disaster and why they've cracked down on the big tech. And I think what is interesting for me, and this is where it gets very interesting, is I can see China is taking a pro-wage policy, which is pushing up the prices of food commodities in particular, which is now feeding into political pressure elsewhere, in Japan included. I think randomly, so my sister-in-law is Japanese, and we were just talking the other day, and she goes, I don't understand the Bank of Japan policy. All it does is make me poorer and push up the price of food. And I think that is the first time I've ever heard that type of pushback, that people are realizing that central bank policy, QE and all this stuff is designed to benefit corporates over the consumer. And what I find interesting is if China has decided to break out of that mold and they really set the price of commodities and they're pushing up wages domestically, which pushes up the price of commodities globally, is that going to be the fulcrum around which all change then begins?
So funny how your interpretation, because let's see if we can kind of push and pull, because there's things you said, I'm like, so anyway, with respect. But first of all, because a lot of people still kind of like, what is a hedge fund? What is the life of a hedge fund manager? And something you said was very revealing. Like, who's on the phone talking to their sister-in-law, and your sister-in-law says, I'm just not sure of the Bank of Japan's monetary policy. Boom.
Like I said, I was a geeky boy growing up, a geeky family.
But what's the dialogue like in Japan? Because I was going to say, I mean, both you guys are talking, and my Japanese is rudimental, and I think Hugh's is not. I don't think Hugh's too great in Japanese either. In Japan, are market commentators talking about this stuff? Is it known about? Because I assume they've got a fairly free press out there. So are people? Is there criticism of what the government and central bank are doing, or are people sort of just figuring this out on their own?
So I'll give you this is what I find interesting about Japan is what this observation actually sort of got me going in the hedge fund industry, right? So when I first started in fund management, you get told things like, if governments spend too much money, bond yields go up, currency collapses, equities always outperform bonds, all this sort of stuff. And I put up my hand and I said, everything you said is true except in Japan, where it's completely opposite of just what you said. And they go, yeah, Japan's special, ignore it. And I was like, the second biggest economy in the world and the biggest savings nation in the world doesn't fit in with your model, but we'll just ignore it. That doesn't sound right to me. Let's try and find a model that works. And this is the thing that always gets me, and Hugh will probably know this as well, is that every few years you'll find a hedge fund blows up and the body rises to the surface, and you go, what killed this hedge fund? I go, we were short JGBs because Japanese government bonds, because everyone was always convinced Japan was going to have inflation, the bonds were going to sell off. And they never did. And the Japanese understood what was happening in the rest of the world way before anyone else. They were buying treasuries and they were buying bonds. They knew that deflation was coming, whereas the rest of the world, like Western world, was convinced that bond yields were going to keep selling off forever.
Yeah.
You're right. Sorry.
Well, but remember, we ended up pursuing or finding ourselves on the same flight path, and so they had the benefit of catch up. Like we were playing catch up to their knowledge, yeah. So like when you were buying those Irish bonds, I would have been doing receiver packages because there was still no understanding of the profound nature of the shift with regard to the great financial crisis. The great financial crisis was on a par with the 1989 peak in the Japanese stock market, which is to say that it actually brought on a silent depression. You know, a depression, let me be very precise in how I'm defining that. A depression is when the subsequent recovery, you never attain the speed of economic growth that you had previously enjoyed. So I want to say with regard to most Western economies, the 30 years up to 2007. And I think this would be very much sponsored by the rise of the euro-dollar monetary system. But together they produced 2.7% on average real GDP growth. And here we are, what have we, 15 years or so since 2007, and we're like at least a full percentage point short of that. You think, well, a point every year for 15 years. And if you put that on a per capita basis, for each family household, it's thousands and thousands of dollars, which you thought was there for you and it didn't happen. So kind of got lost there. But that's why I was saying that the rest of the market was Pavlovian. We have an economic recovery. The Federal Reserve and other banks raise interest rates. We start paying into this. And it's like, no. And the Japanese, if you will, you could see we'd had 10 years where the Japanese had made those errors and where hedge fund guys had gone too short the JGBs on that basis and blown up. So I think they had that hindsight.
I got another way of thinking about it, which I think it takes much longer history, but it's a slightly weird way of looking at it. Can I run it by you and you can tell me if it makes sense or not?
Please, yeah, I'd love to.
Oh, we love weird. We are weird on this show. Weirder the better.
All right, great. All right. So this is my theory. Okay, is that so we've been in a depressionary period. Japan's been in one since 1991. And what I'm thinking is, like, if you go back to the Great Depression, right? So suddenly credit demand dropped. And then suddenly what we had was this sort of beggar thy neighbor devaluation. So every country would devalue against everyone else. And actually what happened was you get a brief burst of inflation. But then when your neighbors devalued back against you, that deflation would come back at you, okay? And so I was like reading FDR's biography, and FDR suddenly realized, he suddenly said, look, if we keep devaluing against each other, we're just going to end up slinging each other's throats. So we need to cooperate. And we, the US, have to do something to make this system become inflationary again. And then basically we had World War II sort of came along. But post-World War II, we went back to a gold standard, which really discouraged devaluation. So it was like making capital controls, but keeping the devaluation tendencies at a minimum, and then focusing on government control over various industries to push growth up and to push prices and wages up. And what I was going to say is that when Reagan and Thatcher came in, and what Nixon did with leaving the gold standard in 1972 is we've gone back to the sort of Depression era policies where for governments looking to generate inflation, they just devalue, and we just end up devaluing against each other. So if you look at like the ERM blow up in the early 91, Mexican blow up in the 90s, Asian financial crisis, GFC, Euro crisis, there's just been this constant blowing up and devaluing against each other, which has caused inflation to fall. And why I think what's so interesting about 2016 is China went, China was under real pressure to devalue and went, no, we're not going to devalue. We're going to do capital controls and we're going to keep our currency strong. And that is why I think we started to see the bond market act in a much more inflationary manner. Anyway, that's my theory. It's all very currency heavy.
No, indeed. I disagree.
Okay.
I disagree immensely. So the Bretton Woods, you're correct. They went back onto a gold standard whereby it was anchored by, the dollar was anchored to it. The flaw in that was that that would require dollar credits to kind of finance the rest of the world. And that setup, you would never be able to create enough dollars to feed the rebuilding of the world. And I want to say that's why within less than 10 years, that system had already been sidelined by the emergence. The first euro-dollar account, I think, was as early as 1955 by NatWest in London.
Yeah.
And that was the creation, that the world had a profound scarcity of dollars. And so you had to kind of get around the back of Bretton Woods to create them. When Nixon closed the window in 1971, actually, you're just saying, the world has changed. The world is a euro-dollar centric system. And again, we cannot create the dollars domestically that the rest of the world needs, because we do work on a reserve currency basis. So the world finally, I want to say, clicked properly, if you will. However, so having set up euro-dollar system, say 55, and really getting momentum through the 60s, what was the euro-dollar system? It was basically the intermediaries, the banks, were unconstrained. Yeah, it was, you were not being regulated by the Federal Reserve or any other central bank. You were invisible to them. You were being regulated by your counterparties. When everyone is infected by jobbing juice and being kind of the Kool-Aid, keep going. And so the world, the euro-dollar system created huge pools of liquidity, and inflation being a monetary phenomenon, that came to a head in the 70s. And we had this once in 200 year type boom in inflation. Yeah. And then Reagan and Thatcher came in and what we created the myth of Volcker. But the myth of Volcker was being crazy, right? Because the first petrodollar crisis in 1973, when the oil price went from $1 to $4, was the most severe economic recession in 50 years. So severe in terms of nominal and real. And then there we were 5 years later. So we know this is good. The second one, the first one was bad. The second one is like, oh my God. And then this crazy Texan guy, boom. I'm raising rates in the deepest recession ever. And so everyone kind of pushed back. It's great because with your knowledge, I still see all of today's problems really coming through the Asian axis. And we discussed that. And there's many things I want to say to you, but to get you back with us, I think the most staggering macro development in the last week, but really in the last 2 years, if not longer, could be the assassination of Abe. Now, you seem to be someone who's kind of, you're a sleeper cell in Japan. So should I dismiss this? What was your reaction to it, and how should others look at it?
I must say, when I saw it, I really wanted to know what the guy who did the assassination believed in and what was motivating him, because that would be a big tell. Because if you look at the Japanese, they go through periods of extremely bloody and then extremely pacifist. And it's the sort of Japanese way is that they'll try and assuage and keep face for everyone. But at a certain point, when it all falls apart, it just turns into fisticuffs and knife fights. And so I'm very interested to know why this guy wanted to assassinate Abe. Was it because he was being too aggressive? I like wants to rebuild the army, or do you see him as being too pacifist? It's like, why are we not got our aircraft carriers in Japan, in China already? I don't know, and so I haven't found that out yet. I think it's sort of all been very Japanese way, kept very quiet.
But can I ask?
Because I want to say 6, maybe 8 weeks ago, I had lunch with a friend here in St. Bart's, who's one of us, really engaged, really deep, really well, great intel sources, and actually people had reached out that like one of his closest, someone in Singapore with a phenomenal record, just was flagging that the China-Taiwan risk, and this guy that I admire immensely had raised the probability of some kind of conflagration to 20%, and with it like this year, which as you know is a 1 in 5. That's typically it's a tail. 1 in 5 is not tail. And from someone so acutely smart, it really took me back. So Abe is, despite his Mooney connection, and which might probably almost certainly is a deflection, obviously he was one that was pursuing a greater, more a proactive stance by expanding the Japanese military again. And so the notion of him being taken out at this point in time, I'm curious, I don't know if your mind has taken you that way.
Yeah, I mean, like I said, I'm still trying to work it out. I mean, it seemed much more likely that he's taken out by sort of left wing rather than, because he was definitely on the right of Japanese politics. But I haven't seen the details yet.
Okay.
So it's all that sort of stuff tends to come out with a little bit of a lag, especially for foreigners, because they tend to keep everything. Close.
Russell, can I? Oh, sorry, Hugh, on you go.
No, by all means.
Well, I was going to say you're talking about foreigners there, Russell, and I was just saying I just watched the Apple TV show called Pachinko, and there's it involves the world of finance, but the guy's Japanese, but he comes to Korean heritage. He's never really accepted in Japan, and there seems a lot of formality. And I mean, in 2022, is that still the case? Is there a big issue about not being a pure Japanese, and there's a lot of customs and sort of rituals you have to go through being a business person there, even as a Westerner? Is it quite difficult to sort of gauge that? Because it's something that I've got to say I'm not aware of. I just see on TV.
So, I mean, I think the thing is, I think people are aware, so Korean heritage in Japan. So even if you're born in Japan, if you're from Korean background, they'll still consider you a foreigner. That's started to be a little bit changed, but it's still a big deal. What is less known in the West is that the Japanese still discriminate against Japanese families who were dealers who were tanners or butchers from 200 to 150 years ago, because that was an anti-sort of Buddhist thing. And so they call it they have their own special name because it's so wild and so different to Western connotations. So it'd be like me discriminating against you because your dad was a butcher 100 years ago. That it's so hard to understand, but that actually still happens, and you still get discrimination stuff happening there as well. So they hold grudges and they remember stuff for a long time, and they're very sensitive about things.
Is there a lot of customs you have to learn, and sort of, just going there as a hedge fund manager just to do business? There's a lot of things you got to learn and understand, or is it at that level? Is it quite simple?
I think when you're a foreigner, you don't need to worry too much about that sort of stuff. But if you want to live there for a long time, you have to be aware of it. But it's one of the reasons I chose not to live there in the long run, because it was just too much hard work, to be honest with you.
Chris, when you go anywhere as a global hedge fund macro manager, and especially if you've got a big leveraged, like macro is typically trading large pools of liquidity, which typically have low levels of volatility, which support a lot of leverage on the basis of some form of breakage, which will manifest itself in higher forms of volatility and allow you an opportunity to make money. Correct. So when you visit these domains, it is like the little prince is arriving. It's the little prince guy who sprays confetti of commissions.
Well, this is why, Hugh, and this is why we've talked about this, but this is why when Hugh went to a South Korean nightclub, or was it a nightclub where he was partying next door to the Prime Minister, and Hugh was not happy with what was on offer on the drinks menu, and a minion was sent out down the high street to find Hugh some plum wine. Ooh. Was that not right, Hugh? A plum wine.
I like a bit of juju. I don't like champagne, but
yeah, but you sent the poor guy out. And was it not in Japan where they always peeled your bananas for you? They were peeling your bananas.
Let's move on. Another question for you, Russell. So China removes. It opens its current account. It's closed just now, like you say. There are capital controls. So it opens it up. The renminbi, which way, higher or lower?
Do you know what? I'll be honest with you. I think you got it the wrong way around. I think the rest of the world is going to follow China into closing their capital accounts.
Well, okay. Let's discuss that, because I think that is really on the spot, or very close to where we are. I believe that so we mentioned the gold standard. You mentioned Roosevelt. We mentioned competitive devaluations. The root cause, and again, you said we live in this. The world is always interesting. It's always a riddle, but like now it's insanely dope, right? It's just woo, okay. And you've taken a little time to discharge, think about it, reflect on it, and like I have. The China renminbi, if you will, is the gold standard, and because the Chinese mercantilist system rejects autonomous domestic growth, and it rejects it because it thinks it comes with the cycle that we saw play out at the end of the 1990s with the Asian tiger crisis, that consumers left to their own discretion, and when they get richer, they go a bit crazy. You know, they take the juju juice, and what happens? You have these profound, you have volatility in economic growth, which can manifest itself on the downside by people rejecting the political status quo. They're like, we're not having that. So they are very much seeking to control their own destiny by ensuring that the determinants of growth are external to themselves. Okay, so their population takes a hit, right? Because it's not as rich as it should be. For me, the dollar renminbi rate today, I want to say it's 6.75 to be simple. I want to say that it should be trading below 5, somewhere between 4 and 5, and that would be a reward. That would raise the wealth levels of those indigenous and productive Chinese citizens. But the closed account and the willingness to send all of that savings internationally. So what happens? They send it. They have a trade surplus, and the US has to run, what is that called? A finance account surplus, which is to say the US is the only sovereign body big enough and willing to absorb all of that savings. And the Chinese are saying that they're subordinating. They're saying, hey, you create the growth, right? Here's what would you call it? Vendor financing, like pay now, never, or like buy now, never pay in the future. We're financing it and keep us well stacked. Okay, and the problem with that is you get the Bernanke, this glut in savings, and for sure it's a glut in savings because America is the recipient of dope amounts of capital coming in. But America is not in the 19th century. It's not building canals. It's not building railroads. It's not in the 1920s with chemicals plants and the first emergence of the first revolution in telecommunications. It's not in the 1950s where we're building motorways and we're building out-of-town communities. It doesn't need the money. And so that glut brings the cost and the price of money to like unbearably low levels. And the antithesis of that is asset prices have to be very, very high. And again, having taken down the Chinese citizen in terms of their wealth, you end up taking down the 99% who get displaced by the fact that all of the production has to be outsourced to China. So back to what you said, I actually think the US has to step in and start charging the Chinese for depositing so much surplus savings with the US sovereign.
I don't see that because what I see is if you look at the renminbi, they don't look at the renminbi dollar exchange rate. They look at a basket of other trade nations. And if you compare renminbi to Korean won, yen, euro, Aussie dollar, it's all at lifetime highs and moving higher every day, particularly against the euro and particularly against the yen. So on a trade weight basis, the renminbi is appreciating massively. The current account surplus is actually relatively small. And what I find really interesting about Chinese policies is that adopting policies to try and lower the price of property, which I think is a very pro-consumer, anti-business type policy, which frankly I think the UK should probably adopt, in my view. And also trying to reduce the cost of education, which had frankly spiraled out of hand in China as well. So there's a lot of policies that China are putting on that actually make a lot of sense. So I think there was a time back when China was running like a 10% current account surplus. US should have charged people to put money into treasuries, but I think those days are gone. Chinese treasury holdings haven't risen for like 5 years now.
Not quite, but the current account surplus is approaching the highs again, and actually you're right in the sense that they seem to be hesitant to continue to pursue the policy of government capex, building bridges, fast trains, and what have you, because it's a negative NPV, which causes debt to rise and rise, and again, it makes them vulnerable, so they don't like that. I don't think they've been proactive with property. I think there was a profound cycle in property. I think they tolerated it because it contributed upwards of a third to GDP growth, and after the great financial crisis, they needed something to fill a hole, and they accepted the property. But these are
property developers in China have been interesting because I was short them for ages after the GFC. They were good shorts, and then suddenly they turned into terrible shorts. And then in the last year, when I've not been involved in them, they've collapsed down to zero as the Chinese government declared war on them.
Well, you're right. They did declare a war because they did change they were like Countrywide Financial.
Yeah,
they were like the mortgage originators that from 2002 to 2007 they were the best business models in the world because you got it was a negative working capital. You could expand a business with the client's money.
Yeah,
and so any return was an infinite return on the negative capital, and the ability of in London, if you're financing condominiums, it's a long, laborious process. We put little incrementals. It was like you basically, the developer got all the money immediately, which allowed them to move forward. And when they stopped that, they went from the best businesses in the world to being bankrupt. There's no middle way, So that was what was going on there. And the education, you said, but surely they've. I don't understand what they're doing with education. I don't understand what they're doing with technology because they came down and hammered the kind of where you can try and enrich your education through your own means via the internet platforms, and they've come down and said it's almost like that awful UK comprehensive system where they said no one can excel in the sense that we have to draw everyone to the average. Like the average is fair. And it's unfair to have grammar school and something else. Everyone has to be mediocre. That's my interpretation.
Well, when I went to high school in Japan, so, I was a grade 8 student in Australia. I was dunce in Japan because basically they went to school on Saturdays and then they used to go to after school juku, cramming schools for another 2-3 hours, which I ended up, a few years later, I used to teach English in one of those. And it's a horrible life for the kids. I mean, they literally are at school from like 8 a.m. to 8 p.m. every day. And I think that is what they're trying to sort of push back on. I mean, one of the more wilder theories I have, and China again fits into this, is I think we're at a demographic turning point in that I think birth rates are probably going to start going higher from here rather than continue their trend lower. And it all.
Why?
Sorry?
Why?
So here's the theory. and it still needs a lot of work. But here's the theory, okay? So there's, I think, an idea in people's head that free markets and capitalism is unequivocally good and socialism is unequivocally bad. But when we look at any society as it's shifted from socialist to capitalist policies, we've tended to see birth rates fall. So if you take like Eastern Europe, even when it came out of the Iron Curtain, so in the late 80s, early 90s, you actually saw birth rates continue to decline, even accelerate. Because what you had was wages that then had to be pushed to levels where you're competitive against other nations. And so your average worker just doesn't have enough money. And so if you want birth rates to be high, you need wages to be actually sort of uncompetitive. And I've been trying to work out, is there a way I can prove this? And so one of the best things I've been able to do so far is I've gotten the minimum wage in the US, it's a federal minimum wage, and I got the price of a Big Mac going back to the 60s. And if you worked 1 hour on the federal minimum wage back in the 60s in the States, you could buy 3 Big Macs for that 1 hour's of wage. Okay. These days, you work 1 hour at McDonald's, you can buy 1 Big Mac.
Wow. So
my theory is that if you have low wages or wages that are at the very sort of hunger level, right? So as it's well known that a lot of people working at McDonald's have to then still go on food stamps in the States, right? If people are at sort of starvation levels, why would they have more children? Or why would they have any children? They can't even feed themselves. So if you start to push wages higher, you then start to see higher birth rates. And it actually fits in with the whole human experience of that when food is scarce, people have less children, and when food is plentiful, they have more.
My take on that is the other side. We must have been the other side on a few trades. That selfish gene thing, when the body feels compromised, you're throwing out babies Africa, where the chance of mortality is way higher. You need more babies to kind of get your gene to pass on, and what you find is prosperity. The system goes, hey, let's just be a little bit less active in bed here. We're cool. We've secured passage. So I'm not sure, but I love that quote that the 1 hour for 3 burgers back in the day in the 60s.
It's quality. He's measuring things by burgers, and then he's also got the beer thing. You know, Russell's got a thing going here. He's in a groove here with this kind of like purchasing power through like things like this. I'm liking it through food and beverages. I'm liking it, Russell.
Well, when a country has cheap beer, I tend to get very bullish.
Yeah. We need to do Scotland through Iron Brew, but Iron Brew's our national drink. That'd be a good one as well. But I won't get too Scottish. I've been warned on this show not to get too Scottish, so I will stop there. Hugh, what were you going to say?
I'm fascinated because over that period, society has become unquestionably more obese, and yet it would seem that the cost of becoming obese has become more expensive. Which I'm going. Albeit, I think actually the obesity reflects the fact that given that economic fulcrum point moving away, that you had to adapt food to meet the budget constraints of people. And so at the margin, food has become Frankenstein. You know, it's become a chemical process which meets the monetary need.
But aren't people less active now as well, Hugh? I mean, people are a lot less active now. There's a lot less manual work. People get cars more. They sit in the house more.
China, it's all gone to China. That's
but I'm saying that's another reason why people are getting obese as well. It's not just the food as well. I was saying, that's what I was saying. I was just saying that.
Absolutely. It's fair. It's diet and activity, and then karma. Russell, I think your last Substack piece was Bitcoin. Where are you there? And any nuggets you can share with us?
So it's just a sort of I built like a little model, and basically I published it a while ago, and I took Plan B. Do you know Plan B you must know Plan B on Twitter. He had this sort of like Bitcoin is this type of scarce asset, and he compared it to other scarce assets, and that's where he built his sort of target 1 million at some point. And I said, that is a perfectly valid model. I like it because it's a model, so you can look at it and you can take it apart, see where there are problems or not, right? I accept that. I actually think it's a good piece of research because it's very transparent. But what I noticed was that Bitcoin trades like a speculative asset, at least at the moment. And when you have a speculative asset, the best time to buy it is when everyone's bearish and everyone's short. All right, because that's when you get these sort of huge rips that forces everyone in. And when we go back to 2020, you could see via positioning that it was a heavy short interest into Bitcoin, right? And now what's happened is all that short interest got destroyed in 2020, 2021. And now what's happened, even though Bitcoin's sort of fallen quite a long way, none of the short interest has rebuilt itself. It's still non-existent. And in fact, people have been buying all the way down. And historically speaking, if it's a speculative asset, which I think it is, that is a terrible sign. It means there's still no bottom yet. You still need that flush out where people go, just get me out of this, And I must say,
Forgive me. But I was going to say, it's become easier today to short Bitcoin. 2020 was still difficult, not impossible, but difficult. Today, there's even short ETFs, I think, on Bitcoin.
Yeah, but when I look at like a long dated series like that continuous from earlier, so I look at short interest in that GBTC, which is a big listed Bitcoin trust, that's collapsed down to zero. And the CME
is trading at a 30% discount to NAV, I think.
So what I find really interesting about it is I think it was trading at a premium, which caused people to short it. And then the shorting of that caused it to go higher and trade even bigger premium, which drew in more shorts until eventually they got crushed.
But you know what was happening? If you were a registered investor in the US, you could approach the fund and you could ask them to issue new stock. Yeah. And so you had that 20% dynamic difference, and it was the greatest damn trade.
Yeah,
again,
absolutely.
my Singapore buddy or my St. Bart's buddy, I mean, he pulled in millions on PA just phoning. It's like the Grayscale. Oh, you're back again. You would like some more stuff? Yeah. Keep going, keep hitting me, bud. Yeah. So yes, I kind of agree with that. It doesn't feel. Religion is not a good thing. Where are you there? Are you looking at any individual stocks? Because one of the things I've been trying to share with people is the emotional landscape of investing, and that we are presently in a bear market and things have kind of changed. And you've got to recognize if you're vulnerable, and the greatest vulnerability is to the conceit of a well-formed argument. Yeah. And like the best arguments in terms of trying to conceive of an immediate and rising set of profit figures from an industry or particular companies can be found in extractives where supply demand seem all out, and when you do the overlay of how we're trying to take carbon out of the equation and what that requires and it demands of particular metals, and so you can be invested there, and ratings are modest. Agriculture is full of this thing where business profits are exploding, and uranium I really like because I think there's going to be another uranium golden generation of nuclear rather. But to hold the stock just now, I feel like if I was shorting anything, I would be shorting the positions where it is so obvious that the next decade is going to enrich these businesses because people are holding on. But I'm sure you agree, everyone sells at the end. Have you experienced that?
They always do. I mean, that's just the way it works. But what I find, if you were really talking big stuff, right? Bitcoin for me is still a relatively small asset. I think the asset that I find most interesting is bonds. So, I bought. So I'll tell you, like one of my last big trades, made a lot of money, was back in 2015. I bought 30-year JGBs unhedged because basically everyone was short bonds and everyone was short yen. And I was saying, look, China's starting again. The problem is this deflationary trend. I felt physically sick doing it because you're buying a 30-year bond yielding 1.2%. And, it felt, but the logic was good. And then 2015, 16 came along. I made 20% in the yen, and I made another 30 to 40% in these JGBs. And I think I probably ended the career of a certain bond salesman for JGBs in London, because we sold it back to them at the absolute peak when everyone was desperate to cover. Now, what I'm trying to say now is that buying treasuries or buying bonds or buying JGBs used to be like, no one wanted to do it because it's like bonds are a disaster. They still remember the 70s when they were considered confiscation certificates, if you remember that. And what I would say has been a sea change now is that everyone is buying bonds all the way down. Everyone is saying there's a recession coming, so I got to buy bonds, going to make me money. And actually, I think the world has changed in such a way, in a political way, where it is no longer acceptable for governments to practice austerity, right? They can't take money away from consumers. They have to compensate them for their losses. This is a terrible environment for bonds. And yet everyone's buying them because they've been sort of normalized that bonds are a way to make money, right? That you can make capital gains from bonds. Whereas actually, the environment and politics has changed, I think, to make bonds really bad. And so people are like looking at 3% on a 30-year US Treasury and going, oh, that's great value. I want that. Whereas, 10, 15 years ago, they would be like, oh, no, that's definitely a short. And that, I think, is the biggest change. It's sort of similar to Bitcoin, but people are buying it all the way down. So I think the losses in bond markets have only just started. And I think they're going to get much, much worse from here on in.
Yeah. So the bond market has been the US Treasury bond market has been the most exceptional, perhaps the most exceptional bull market in the history of financial markets, in that the duration of it has been, heavens, what are we, 40 years? And the scale of that market and the low volatility in that market, which afforded huge leverage for so long. So I think the scale of the profitability scalp from that bull market surpasses anything. And all bull markets come to an end. So I'm going to try and sketch out an absurdity, if you will, to you, allow you to come back, and then we'll let you go. Okay. So I believe that profound turning points, pivots from bull to bear, bear to bull, occur under the cloak of absurdity. And so I want to say that it was the summer of 81 when Volcker et al. Were still, we had 10-year rates approaching 16%, that it was blindingly obvious that inflation was in retreat. But there was a Pavlovian thing that set in, like you said, the confiscation. And so 16 was an absurdity. 16 with falling inflation, 16% yields with falling inflation was an absurdity. And I just feel that this Treasury bull market, for some of the reasons that you cited, is in its last legs. But I'm looking for absurdity, and I'm looking for yields to go back to their lows, even with a kind of a legitimate narrative that you mentioned, that probably inflation and the way of orchestrating economic affairs has changed. Yeah. And how we get there is the yen, and indeed the South Korean won, which doesn't get as much attention, but seems to be kind of, on the chart points where it could really, really weaken. And the yen has weakened. Statistically, this is a noteworthy change. And I fear that is a kind of Asian tiger kind of thing, from the sense that it elicits a deval, and I know you'll disagree with this, a deval response. If it gets out of hand and the yen goes, say, 200, the Chinese will take measures to move the yen to 910. Not because they're vulnerable, but because that's what you do. When the scorpion is halfway over the pond on the frog's back, he goes, you can't stop yourself. Like, you can't allow your competitors to steal a march, and you do it. This is what Taiwan did in 1988, yeah, or 89. And so, and if we go 910, the amount of deflation, I call it Mad Max, that would take you down to those levels. And eventually you kind of have to rework how you engage, sovereigns engage with each other, and we would kind of unwind that mercantilist model. So boom, over to you.
Yeah, look, so I'll say, first of all, I think what Trump normalized was the use of tariffs. And tariffs are profoundly inflationary, and then they can become a retaliation against your competitors devaluing. It doesn't require you to devalue. That'd be one observation. The second one, which is a bit more of a market one, is one of the, going into, so I made my name as being very bearish and very short and long bonds for a very long time. And going into COVID in 2020, I had suffered a terrible 2019 because I thought 2018 was the beginning of the bear market, got short, and then got ripped to shreds in this sort of mega bull market in 2019. But I was still very short, very bearish going into COVID. And I remember, being long JGBs, long treasuries, and mid-March in 2020, we were up big time. And I thought this is only just the beginning because I'm thinking yen's going to 60, the whole gamut of trades. And we still need to see credit spreads blow out even further and bankruptcies. There's a whole range of different products that have proliferated in this low interest rate environment. I expected to blow up. And what the strangest thing happened was that JGB yields, so on the 30-year, which is not bought by the BOJ, never went below the 2016 lows. They stayed higher than that, which was the first rally in JGB yields I hadn't seen take out old highs or old lows. You know what I mean? In my entire career. And we saw something similar with Swiss franc bonds as well. And so that was what made me think, hang on a second, bonds for me in every crisis is always taking out a new low. If it gets too extreme, you got to take it off, but you've always gone on new lows. And this time, and this was in Japan, right? And this was even before if we knew COVID was going to wipe out half the population or not. We didn't know any of that. And so for me, what I would say is that the bond market has been very weak this year, but has been signaling weakness now for 2 years already in a very sort of, in what I consider the front-running bond market, even more so than treasuries. Japan has been the front-running bond market for well over 30 years now. And as long as JGB yields at the back end are trading weekly, as they are still doing, I would be much more minded to think that we're in the end of the bull market for bonds. If JGB yields revert back to their old type, then 100% I think the market is coming back to your view. We have one more retest. But at the moment, JGB yields at the back end, which is where I used to play, are still saying inflation, despite what's starting to happen in commodities and recession talk and everything else.
And I was talking with my former partner, Tom Roderick, and he's younger, he's active, and he is playing he's paying yen rates, the 7-year, I think is the benchmark, and you're being given essentially a free option on that. Like the punishment cost is kind of nothing, it's like a very asymmetric trade. So let's go kind of fast. So yen, where's the yen going then? Dollar yen.
What I find, what makes the market so difficult, and one of the reasons I stepped away, is that the yen will trade where the BOJ wants it now, because the free market, the system the US used to keep in check by coming and saying, hey, you stop controlling your currency, that the free market can, they don't do that anymore. They seem to have lost interest in that a little bit. And I don't know if that's because they can use tariffs now or whatever. So I think if the BOJ came out tomorrow and did a 25 basis rate hike and said they were going to stop buying JGBs, I think the yen would rally 20%. That's probably why they don't do it. So I really think it's really become. So I think the thing is, we used to think there was this idea that central banks were omnipotent, but actually free markets really told them really who were in control, and the central banks reacting to it. But now we're in an environment of big government environment. It's really it's a choice of where your currency goes. And I think this year the Americans have said we want a stronger currency, and so the Fed has been far more aggressive than the ECB or the BOJ, and so they get rewarded with a stronger currency. China has run a much more tighter monetary policy and has a very strong currency as well. So it's really up to what the central banks want.
All right, you've got to come back.
Thank you for joining us for part one of our discussion with the former macro hedge fund manager, Russell Clark, out of London. We're going to try and get him back soon. This is an Asian conversation that just has to be continued. But in the meantime, if you haven't already, please make sure you like and you subscribe to YouTube at Hugh Hendry Official. And please rate and comment on Apple Podcasts by searching for my name, Hugh Hendry.